Afternoon all, how are we doing? How's everybody today? All good? Lots of news today. Busy day. Stuff's moving. Morning, afternoon even, Ian, Martin, Amy, Mumo, Monkey, Rico, Fletch, Johannes, Evil, Christian, JC, Kennedy, Baggy, I can't even say it properly. Virginia, Peter, Alan Bay, Emac, Day Trader, Gregors, Yarp, Brian, Joe, it's time. For what? Philip, Champagne, how are we doing? All good. So, busy today. Afternoon, Dougal, Florian. So we've had a lot of news today, a lot of volatility, a lot of weird movement all over the place today. So this morning we had the Euro announcements. We had a big, strong push up on the euro, and then we had a massive rejection on the euro of the German numbers. Then we had the pound, which rallied before the PMI figures came out. So the pound pairs all suddenly shot up before the PMI figures. Then the PMI figures came out, and it's completely done a A-shaped recovery, totally gone the opposite direction. So yeah, markets all over the place today. Absolutely headless chicken, basically, running around, doesn't know what direction it wants to go in. We've had the retail sales come out for Canada, which were ever so slightly up. Let's look at EuroCAD. It's very difficult to actually use any instrument to tell us what direction anything's going today because everything's moving. But Canadian dollar, a little strong off the back of those numbers. We've had the US unemployment claims came out. They were expecting it to go up. It came down. Unemployment claims, though, are a kind of a minor figure because they're not the unemployment rate. It's just people that have bothered to claim for unemployment. A lot of people don't do that. So it's not a particularly good gauge. But the US dollar blown through the roof. We got ADR hits all over the place on the US dollar. So, you know, everything's just nuts today. Total nuts. 150 ADR moved to the upside, 150 ADR moved to the downside. Mental. Whole market's gone crazy. Yeah, so 150 ADR up on the pound US dollar. We're 150 ADR down on the pound US dollar. Just gone nuts today. DAX this morning. Oh my God. Already hedged on the NASDAQ. DAX this morning. Nice clean break on the DAX today. Really, really easy move on the DAX. So there was your opening range break today. In there, 2R within the first 5 minutes. 5R within the first 20 minutes. We got to 6R and then it pulled back. It's still going. 150 ADR on the DAX. Yeah, something's kicking in. The market has woken up today. It's been very flat for a long time. FTSE couldn't manage to get a decent move off the FTSE today. Total sideways move. So got hedged on the FTSE. We had a push up to 1R. And then we pushed back down again, got the hedge on. We dropped down to 4R. I was targeting the previous day's low to the downside. We didn't quite get there. So my target was here. We didn't quite get there initially. And then I decided, because of the news on the pound, to move my target down quite substantially, just in case we got a rally on the pound, which we got pre-market. So it didn't actually move off of that. So all that's happened today is we're back to where we started with the FTSE. So I'm still in a hedge on this. I'm going to move my TPs back up to yesterday's low, to the downside. So if we do drop from where we are here and we can put a move in down to yesterday's low, I'll get out of the shorts there and look for a pullback. Yesterday's high is my upside target, which is ADR today. But it's not going anywhere at the moment. So I'm stuck in a hedge on the FTSE. And I've just hedged the NASDAQ. Clean break on S&P. Hedged. Oh my God, look at that. hedged on the Dow. That's where the candle low is. That's my order. Unbelievable. So whipsaw. So NASDAQ and Dow hedges, S&P clean break to the downside. What a whippy day today. God, everything is all over the place today. Possible to tell what's going on where. The only thing that really hasn't moved is the only thing I want to move, which is the bloody yen. This US dollar yen is getting back up to danger zones. So we're up above that 150 level. We were looking for this symmetrical triangle pattern to break, which we've looked at for the last couple of days. And all it's done today really is to go into rotation. But the US dollar's rallied on the back of the unemployment claims. However, I'm not sure that's going to hold. So the the PMI figure that's coming out in 7 minutes, is going to be quite critical today. So it would be good to see negative PMIs. Very big negative PMIs would be lovely. And get that yen down. But if they come out positive, that US dollar yen is going to rally. That's going to take us up above that high. And the Japanese are going to scream. So there's a chance. So I've changed my RSIs because I was just looking at something for somebody in Discord. And I realized I haven't changed them back. So, yeah, we'll see. See what happens. I just need to check my P&Ls because I want to close some stuff. Pound CAD. Oh, it's just about to hit TP anyway. I'm going to stick a little trailer on that. So trailing pound CAD. I'm just locking in anything that's going to get affected by the US dollar, which is basically US dollar and Canadian dollar. This isn't a lot of money, any of this, but I don't want to get caught the wrong side of a move. So it's worth just banking it. And if it runs on the news, it runs on the news. Got a buy on that now, look. I'll trail that with 170. I'll trail that with 200. Just in case. I think that's going to stop out anyway. Nothing else to bank. Euro pound will be fine. So everything else is fine. So I'll leave everything else there running. We'll have a look at the RSIs and stuff in a minute. New Zealand, US. That's close. Going to close that one out completely. Swiss is fine. Pound yen, Aussie Swiss, it's all fine. Just going to put a break-even stop on that. US dollar Swiss. 0.25%, is it worth it? Oh, it's a buy, yeah, because we're hedged, aren't we? It does get up there. Going to break even the buy, and it'll either hit TP at ADR or it'll stop out. That's it. Cool. Okay, there we go. Everything's adjusted. So we'll have a look at those in a sec. We've got 4 minutes to the news. I just want to see what's going on with the indices. Not a lot. Whippy. This is the problem with opening on the indices ahead of news is always dodgy because the market doesn't want to put the opening range move in, so it executes some orders, but you don't get any strong movement because it's waiting for that news event to come out, and then it will start to put the orders in when it knows whether the US dollar is going to pump or dump. But we'll see where they go. Afternoon, who haven't said an afternoon to afternoon, blue trader in Pontevedra, sunny and rainy. All good so far. US dollar news banked me 1.99% today, 3.4% drawdown. Cool. Let's make that $75. Afternoon, Crumb. US dollar yen moves down after CPI, or we'll see a wick up and then go down. How do you know that? Do you have one of these? If you don't, that's just a guess. Personally, I have absolutely no idea where the US dollar yen's going because I don't have a time machine. Don't forget to hit those thumbs. Right, US dollar rallying ahead of the news. Wrong rally ahead of the news. Oh, it's so tempting just to hit the sell button on everything. Going to go pop one way or the other, isn't it? Afternoon, David, Ian. No, David, Ian. Ikenna, David. I presume your name's David. Afternoon ago, sir. You have a bit of a caps lock problem there. 2 minutes to go on the news. So what we'll do is we'll watch Euro US, I think. And see how strong that move is. The Euro's dropping quite hard at the moment. What's the pound doing? Dropping hard. Just got a rally on the US at the minute. Seems to me all of these PMI figures today, literally virtually every PMI that we've had a move pre-market released today. It's almost like they've released all these PMI figures early to the banks, and we're not getting them. Every now and again, you get a move where there's just a speculative move ahead of the news. And it's happened with everything today. So the US dollar was rallying hard pre-PMI. The pound went nuts pre-PMI. We had ADRs all over the place. So lots of ADRs hit today. Euro US dollars just hit 150. All ahead of the news. So big, strong push up there over 150 ADR, and then bang, straight back down again. So this was all pre-market, all of this stuff. It's as if they know something we don't. Afternoon, Evans. Up 3% today with no drawdown. Good for you. Those are the days you like. No DD days. Lovely. Don't get many of those. I've always got risk on, so I'm never not in DD. 5 seconds. Looks slightly negative US. So I suspect it's an as expected result. 51.5 and a 51.3. So one cancels the other out. So it's neutral as expected. So no news on the PMIs for the US. So we'll see if they undo the US move that we've just had put in. US dollar CAD's just come off of ADR. There's your reversal, so that's coming down. We'll have a look at the ADRs. We'll have a look at the RSIs first because they're nice and easy today. There was a few this morning that we had extended, but all we've got at the moment now are 4 hours. So New Zealand dollar yen 4-hour RSI extended to the upside. Did I just... Oh, you idiot. I thought I had. I clicked on the chart and I accidentally moved my bloody stop loss. What size was that? I'm going to put idiot. Fat finger. So yeah. So New Zealand dollar yen extended on the 4 hour. Big strong move up there. We've had a very small flag break off the previous 4 hour RSI extension. We got a flag break. Wasn't really much of a pullback. Just about a 38% retracement. So just a shallow pullback on the initial leg. So this whole move here really hasn't had a decent move back, the different profit takes. So the further away we get from the 24.72 on the 4 hour, the more likely it is for that to dump. So very, very extended there. And obviously we're waiting for this yen move to come in. Well, that reminds me. So news this morning, we've had loads of news, obviously, coming through. Throughout the day today, we've had lots of bits and pieces of news released from the ECB. So broad consensus among members is it was premature to discuss rate cuts. So again, ECB's potentially putting that rate drop back. Everybody's putting that rate drop back. It's just these fundamentals, the inflation numbers. I don't know why I refreshed that. We haven't had any inflation numbers. So it's not going to change. These inflation numbers not coming down fast enough for everybody. They want this. They want to get closer to 2% before they press the button. Or they want to see this drop really quick, which will make them press the button because they don't want to overshoot and get down to negative deflation. So not happening fast enough. So the euro coming out today and saying we're not there yet. It's Bank of England came out this week and said, Bailey said basically, we will do our rate cut before we get to our target of 2%. Others seem to be saying we want to be virtually there before we do the rate cut. So everybody is putting those interest rates back month after month after month. So what we're seeing is more of that, which is just what the market's doing at the minute. So extended there on New Zealand dollar yen. And again, yen is one of the ones that is going to be pressing that button to increase their interest rates up to 0 because they're negative. Pound yen, same thing, big extension. That's just come down. So that's a nice reversal off of that RSI extension. Need to see some commitment in this yen, though. It's just not following through on these moves. You're about to get a reversal alert on the hourly. You've had your 5-minute. Ugliest reversal alert in the world award just goes to the pound yen. An awful reversal. Euro yen, again, 4 hour RSI extension. That's coming down nicely. Beautiful 3-bar reversals going in here on all of these. So push, pause, pull, drop. Same as that. Drop, pause, push, off we go. So going, and within these 3-bar reversals, all a 3-bar reversal is a market structure shift on a lower time frame. So when you see a 3-bar reversal on any time frame, if you drop down one time frame, you will find a reversal alert. Yeah. So this is why 3-bar reversals are so good, because it's indicating a confirmation of the reversal alert on a lower time frame. So if you drop down to a lower time frame here, yeah, you're just about to get that reversal alert trigger on H1. Yeah. So drop down one time frame. So if we had a 3-bar reversal on the hourly and you drop down to M5, you'll find a reversal alert in there, or M15 probably. So that's nicely extended. Aussie dollar yen also very extended to the upside. That's one's rolling over as well. So everything's embedded at the minute on these yens. We've been embedded for nearly 2 weeks. Solid move to the upside. Pullback is going to be quite sharp when it comes. But we need some positive notes coming out of that yen. Jesus. Hedged on all 3 today. Right, let's put targets on these. God, what do you do with this? We are at 125 ADR already on the NASDAQ. So target for me is going to be just shy of well, not yesterday's high, is it? It's nowhere near yesterday's high. This high. This basically is a downward channel. So the trendline junkies will be selling the crap out of it here and probably getting run over. So I'm going to look for a double top here. If that fails, we've got a double top at 175 ADR. So I'll be taking around about third of an ADR heat if that doesn't produce a pullback. Downside on it, very difficult after this rally that we had yesterday off the back of the Nvidia earnings. I'm just going to leave it at ADR. This was a propulsion move this morning. I don't think we'll get there. We're more likely to get here, but we'll see. So just going to leave that at 5R to the downside. It's probably not going to be a great day today. Dow, we're out the highs. Nothing you can do with that. We're at all-time highs. So, you know, sky's the limit, basically. So I'm going to stick at 5R, which is 150 ADR. See if we can get a pullback at some point. If it does 2 hours worth of strong rally, we're going to get a pullback of some description on that. So 150 seems like a good target to the upside. Downside target, I'm going to target there, which is above those previous highs. So we've got this high here, that high there. So that area there, we've rejected that multiple times, broke through it, hovered around, tested it, and ran. So if it comes back down, we know they bought it from there. So this propulsion gap, we would look to that to hold up. By the time it gets down there, it's going to have done 125% of ADR. Very unlikely it's going to get there. S&P, same thing. Just going to pick a 5R upside target, leave it where it is. Downside, leave it where it is. It's just a massive whipsaw today. It's weird, isn't it? Market pays you in the morning on the DAX like that. And then the afternoon, complete whipsaw mess. But this is news. This is what news does. I don't know how many times I say it. We shouldn't trade before big news. And then what do? Come in here and trade before big news. But look at that NASDAQ. This US dollar's rallying back again, I think. So much volume. Volatility today is off the charts. Everything's just all over the place. It's one of those days where you just have to sit back and go, right, we'll come back tomorrow and we'll try and unpick what the hell's happening, because market has got no idea. It's A-shaped recoveries, V-shaped recoveries all over the place. It's just volatility, volume, and no direction. Nuts. So there's your RSIs. ADRs, quite a few of those to look at. We'll have a look at those in a sec. Let me just catch up on the chat. Ideas for NAS exits long here. I'll just put that, just done that. I think the news good for the US. The difference of the services PMI is higher than the forecast and previous, but also manufacturing is negative, which cancels out the services. Do you think Chinese stocks are on the verge of collapse? I have no idea. I know nothing about Chinese stocks. I don't trade them. So, not a clue. I don't do China at all. Never got involved in China. I might do when the new world order starts and we start this new currency with Brazil and India and China and all that stuff. But at the moment, China's not on the radar. Don't get involved in it. Spreads too high, swaps too high. Volatility is all over the place. So, right, ADRs today. I mean, there's not much point, to be honest, in going through this. You can literally everything's whatever you got into today, you're out of it probably. So Aussie dollar yen straight up 125 ADR, reversal alert out. Aussie US up, ADR out. CAD Swiss yen ADR not quite out. You've had 55. Yes, you are. Half an ADR is 43 out. So these have all played out basically because we've got A-shaped recoveries and V-shaped recoveries all over the place. So anything that you're in basically There's a good chance that you've kind of got out of it today. Your reverse alert there on the Euro Swiss to the upside, just gone in. Euro pound. Yeah, Euro pound is an utter mess. Look at that. So there's your ADR high, your ADR low, and that's that news. Back to where we started. Absolutely nothing. This is absolutely typical, isn't it? PMIs for the euro, PMIs for the euro, PMIs for the pound. Cancelled. All that volatility today, not moved a pip. Euro yen. That was an upside hit. There's no reverse alert on this one that you could trade today. So I am in it because obviously it has triggered, but I was already in it anyway. So that was a horrible reversal because you've got all that movement and the reverse alert didn't kick in until we got all the way back down here. So, but that's coming down nicely now, that euro yen. So that is a reversal. You are in it probably, and it's 25 pips to the good. 37's half an ADR. Euro US dollar. Again, not a nice reversal on this one. Way too big, half an ADR of movement before you got the reversal alert, but it's panned out. You've had half an ADR at least of movement to the downside. 45, half ADR is 52, so you pretty much had an ADR out of that if you took it. Why didn't I take that? I can't quite remember the logic on that, but I didn't get into that for some reason. Bear with me a sec. What time did that happen? Logs gone. Data center connection. I don't know. You probably did get that. I had a data connection issue there. So I'm not in that one, but that would have been nice. Pound yen. Already in that from a previous ADR. So the previous ADR that I had on that one was all the way back here. So it was that one. We only got a tiny little flag on it. Then we pushed up, got a nice rejection back down again. I took that profit off on the third position. If I'd have left that, this is a good example actually of manual intervention and how you never know if manual intervention is the right thing to do. So I took a manual intervention on that one. I took that trade off there, which meant that my average price was here. Yeah. So when we pushed down to there, it wasn't enough profit for me to take the rest of that position off, and now it's pushed back against me. So that was the wrong thing to do in that case. If I'd have left that on and hadn't taken that off, that would have been a beautiful profit and all three would be closed. Yeah. Someone was asking this morning in the live room why my ADR results are different to their ADR results. That's why. Yeah. What you do with your trades is entirely up to you. You're going to get different results to everybody else. The EA is going to take trades for you based on the criteria. Whether you close a position out at a specific point is up to you. Unless everybody's trading exactly the same set file with exactly the same broker with exactly the same start time, you're all going to have different results. So this is a good example of why you're not going to get exactly the same results and trades that I am. Some people email me and Telegram, they've got better than me. So, you know. Horses for courses. Pound yen. So you had your extension this morning on that one. The reverse alert was hideous. I am in that one though with another position. Pound US 125 ADR. Why did I not getting that either? Oh, that would have happened probably at the same time. Yeah. So some connection issue. It wasn't my internet. It must have been broker related. But I am now in long because we are 125 ADR to the downside. So I have a long position on this. Not sure I want to be long on it, but I am. US dollar CAD. So that's 100 ADR. Reversals just kicked in on that one. That's on its way down. And you got US dollar Swiss 125. So I'm in that first entry short. Looking for a push back down. Going to retest that propulsion gap down there. I could have sworn I just got out of a US dollar Swiss trade. Obviously wasn't on this account, was it? Must have been on this one. Yeah. So that's the H1M5 mean reversion entry exited there. So we'll see what happens with this US now. They seem to be rallying it again at the moment, but we will see if they continue that move. This is also a little bit of weakness in the Swiss franc creeping in. So there we go. Busy day. What's your view on CBDC? Is it going to change the world currency order? I don't know. Hang on, let me get my time machine. Don't know. Too many people worry about what ifs in this industry. You worry about what ifs, you'll never do anything. What will happen will happen. So when was it China, Brazil, India, Russia, all that lot, when they all stick all their money together and go, screw you, the West, we're not going to transact everything through your currencies anymore, we'll start trading that. Yeah. The thing with trading is that there are 1,000 things you can trade. You can trade Forex, you can trade commodities, you can trade stocks, you can trade options, you can trade anything you like. It doesn't matter what you trade. You just need to understand how it moves. You could trade crypto if you want to, but nobody understands how that moves or why it moves. So that's probably not the best thing to trade. But as long as something moves up and down, you can make money. Because all that happens with any chart that you look at, if I hid that and said to you, what is that? You've no idea. And it doesn't matter what it is, does it? You don't know what time frame it is either. It could be a daily chart, could be a 5-minute chart, could be an hourly chart, could be an hourly chart of some cryptocurrency that only launched 3 weeks ago. It's irrelevant. Everything moves up, everything moves down because people buy stuff and then they take profit on the moves that they make, which causes market structure. So it doesn't matter what it is. As long as it's cost effective to trade and it moves enough that you can make money out of it, trade it. So if we do have to start trading the Chinese currency, we start trading all sorts of other stuff, we will. But right now it's not particularly cost effective to do so. So things change. The Swiss franc used to be pegged to the US dollar. Was it the US dollar? I can't remember what it was pegged to. The Swissy used to be pegged. And then they unpegged it. And everyone went, holy crap, I'm not trading that anymore. Because it liquidated brokers, it killed everybody. 2 years later, or a year later, everybody's trading the Swiss franc again. So, you trade what moves and what is safe to trade, basically. Right now, there's not a lot that is safe to trade because everything is pretty confused as to where it's going, isn't it? Do you use commission or spread-based accounts for position trading? Both. I pay a commission and I pay a spread. ADR alert on reversal alert, but trade not triggered. Not often, but sometimes. I guess it's either spread or some connection issue. I've got a feeling. I'd have to check the code, but I've got a feeling that I put into the logic some code that said, when you've got the ADR extension, the reversal alert has to happen within a distance or within a number of candles of hitting the ADR level. I can't quite remember how I decided to, but one of the problems was with ADR, you would hit ADR to the upside. So let's say, for example, we get a news release. Euro pound, perfect example today. Exactly what I was trying to avoid. Yeah, this. So you hit ADR to the upside, and within 10 minutes, you hit ADR to the downside. What do? Short it or long it? Yeah, so I put some logic in to safeguard against this sort of thing. And I can't remember what the logic is. But I'm thinking it's probably that. But I have got connection issues on my broker as well. So, but to be honest, I'm not really bothered. The thing that you find with ADR days is when you get an ADR day, you don't just get an ADR day on one thing. You get an ADR day on loads of stuff. So if you miss one trade for one reason, whatever that reason may be, you're still going to be in other stuff. And if that thing that you go, oh, it didn't take the reversal alert and it didn't trigger the trade for some reason is the one that goes against you 3 ADR, you'll be going, oh, I'm glad I didn't. If it's the one that drops down by half an ADR, so will the others. So what, you miss out on quarter of an ADR or half an ADR of profit. In the grand scheme of things, it's just not relevant, is it? It just doesn't matter. If you're only trading one instrument, though, which you wouldn't be, but if you were, then yeah, I mean, I don't know why. Anomalies, you get them. US dollar home sales numbers are positive. They don't really affect the market. Home sales is all that means is that there is a decent market in real estate at the moment. There always is, which is why it's orange news. Because the important figure for housing is building permits. So the building permits is the one that the banks and institutions pay attention to, because if you've issued a building permit, that not only creates housing, creates revenue, creates taxes, it also creates jobs. Yeah. So the building permits being issued means that there is growth in the building sector, in the housing sector. Home sales means that people are buying and selling houses. Yeah. That can be positive or negative. I'm buying because I've got loads of spare capital and I'm going to upgrade, or I'm selling my house and buying another one because I'm absolutely broke and I'm going down. But everybody that goes down, somebody has to come up. So all the home sales do is tell you how buoyant the housing market is, but it's not used for directional bias on anything like interest rates, inflation, or anything like that, which is why it's orange. It's not a key leading indicator. Was there an intervention from the Bank of Japan? Nope. I wish. What would make you think there's an intervention from the Bank of Japan? There. If there's an intervention from the Bank of Japan, you'll know it. Because it will do this. Let's go back to the biggie. Yeah. So these are normal 4-hour candles. That is an intervention. That is an intervention. That is an intervention. Yeah, you're looking at somewhere between 600 to 800 ADR on an intervention. Yeah, we haven't even hit ADR. Look at the ADR dash. There's no move. Euro yen's 125 ADR, but that's because we've had the Euro PMIs today. It's nothing to do with the Bank of Japan. However, the Bank of Japan are making noises. And this is kind of what I said this morning in the live room. The perfect scenario for me, although it's not good for my drawdown, would be for the US dollar to rally off the back of the news of the PMIs today. Because if they rally off the back of the PMIs, the Japanese are going to turn around and kick the crap out of it, which means that we will get that intervention move, or at least we will get a warning shot across the bow and the market will drop and buy yen. So for me, I'm happy for this to pump. Yeah. If it gets back up to the 152 level, which is at the all-time high, that is the last time the Bank of Japan told us to stop. We did. You have to, because if you don't, they will kill you. Imagine being a bank and you've done nothing but buy the yen. Buy the US dollar against the yen. So you've been doing nothing but selling yen, and your stocks of yen are tiny and low. And all of a sudden, the Bank of Japan liquidates everything and makes the yen massively powerful. You're just going to make a massive loss. So when the Bank of Japan speaks and says, FX moves are undesirable, we're watching the FX markets closely, the market pays attention, because you do not want to be caught the wrong side of it. So what you tend to find is you get this sudden outflux of orders before they do that. It's kind of like poking a bear. You poke it, get away with it. You poke it, get away with it. You poke it, get away with it. Eventually it's going to rip your arm off. Banks will poke, and they will poke, and they will poke. But typically before they get their arm ripped off. But there's another intervention there, look. And there's another one. We had a smaller one there. There's two there. There's one there, and there's one there. So those are small interventions. That was 350 ADR, I think. Yeah, it was about 400 ADR. That one was about 250, 200, something like that. But these were warning shots. Final warning shots. But you'll know it. You'll know it because Telegram and Discord will just blow up. Everyone will be going, what's going on? And I'll be going, I just paid the mortgage for the next 3 months. I wonder if the Bank of Japan is coordinating their trade decisions based on when Clown Boy is trading. Possibly, yes. Yeah, so if you go and watch ICT's stream, if he's still doing streams, I don't know what he does. I've never looked at him for years. But so you go and watch what ICT's up to, because obviously the banks are watching him. That's why he makes losses when he does his live streams, because the banks are watching him and hunting his stop losses. I think banks earn more per microsecond than his stop losses for an entire year. So is there such a thing as a microsecond? Millisecond. You know what I mean. That was very amusing, that video. It's nothing we don't know, but it's just nice to see somebody put it together like that. The chances of being hit by lightning are lower than the chances of him doing what he did. Just unbelievable. Anyway, stuck sending emails, listening to the stream in the background. There's AZ. He likes to poke the bear. I'm not the bear. There's two meanings for a bear. I don't want to be either. I watched the ICT video, what you mentioned in the morning, yeah. I'll put it in the Discord channel if anybody wants it. But yes, it is amusing. Do you think that the floor trader watched the big YouTuber? No. Nobody's watching anybody on YouTube in any bank. If I got everybody, there's only 70 of us in the room, right? Let's say I had 7,000 people in this room right now, and you all had a $10,000 trading account. And I said to everybody, 3, 2, 1, buy. And everybody hits the buy button on the US dollar yen at the same time with 7,000 $10,000 accounts. Do you know what would happen? Nothing. Because there's a bank sitting the opposite side up there right now, making this tick up and down using $100,000 transactions. You wouldn't even notice a move. You are so insignificant in the grand scheme of things. Yeah. It doesn't matter. This is a $7 trillion a day market. $7 trillion. That's a low estimate on what goes through this market every day. They are not watching anybody. The stop hunt is a complete myth made up by an idiot to sell courses. And unfortunately, a load of other idiots have jumped on the bandwagon and are selling courses based on the same thing. Smart money concepts. There's no smart money. The market moves up and down at random and moves through time. There's nobody on the planet that can predict anything based on any kind of smart money concept. When you press a button, there's a 50-50 chance of it going up or down, and the banks have got nothing to do with you, and your strategy has got nothing to do with the banks. It's random. When I press the button, it either goes my way and I bank it, or it doesn't. What I choose to do when it doesn't is my choice. I choose to wait for the banks to move it in my direction. Most people choose to give their broker their money. That's not smart, is it? Go and find me a smart money trader that has been trading on YouTube for a year with a positive P&L on the same account. There isn't one. It doesn't exist. You can't do it. Banks don't do it. If it was that easy, do you think the banks wouldn't sit there with 100 million using stop losses to generate tons and tons of alpha? They don't do it. Why? Because you can't. Because if I put 100 million in the bank right now as Barclays and I say buy 100 million and HSBC go, I'm going to sell 200 million, what am I going to do? Take 100 million loss? Of course I'm not. No bank's that stupid. Traders are. People that sell your courses are. And this is where it's all come from with this ICT rubbish. You know, the algorithm that controls the Forex market. 90% of transactions in this marketplace are over the counter between banks. They don't even hit the chart. There's no algorithm running anything. There's lots of algorithms running everything. They're called quants, but there's not one. If there was one, do you think that the market maker desks in banks would exist? What's the point in a market maker desk making markets with other banks? If there was an algorithm that did that, these guys are unemployed. I know quite a few of them. They're still in jobs. Load of bollocks, the whole lot. Nobody's asked me to say bollocks, fish and chips yet, so there you go. For you people that like my accent. It's really simple. If someone can't trade live every day and make money, they're lying about something. Yeah. You need a femtosecond. I need a... What? You need a femto. Femto? What's a femto? Does it... I feel like I'm talking to one of my children when they say something to me. I'm like, what? Afternoon, Chucks. Stop hunt is the same myth as people saying on roulette casino is using magnets. Do they not use magnets on roulette? It's simple maths. It's all simple maths. That's all it is. Do you already have the Discord? Yeah. Yeah, Discord went live days ago. It's all over the website. Discord. And I posted in the Telegram group that we've got a Discord channel now. Or server. Channel, server. God, look at this. Price action. Look at it. Dead. Lot of volume coming in. Look how erratic this is moving a lot, ticking up and down, but it's not going anywhere. There's a lot of volume coming in. This feels to me like a safe haven run, but there's no direction on the Swissy, so it can't be. But it's the sort of feeling when you've got a load of volatility coming in and people are dumping stocks or pumping stocks and moving money around because something's coming. Just feels like something's coming. There's just so much movement today, but we're not going anywhere. Masses of volume coming through the market, but in both directions. It's not triple witching or anything stupid, is it? What's the date? 22nd. That's not, is it? It's on Friday. When is the next one? February, so it'll be in March, won't it? That's a good website. (16th of Feb). 15th of March is the next one. So 15th of March, stick it on your calendar. Will be a big day. Not a lot we can do with these today. That is just not moving. It's just hideous at the minute. I think he means a memento. I don't know. Do you have... I've already read that. I feel like giving up trading. It's driving me insane. Part of the fun, being driven insane by these markets. Mini, micro, nano, pico, femto. Oh, femto. You need a femto. I see. Get it. NVIDIA is whooping ass and taking names, is it? Yeah. I mean, that move, this was NVIDIA's earnings release last night. And this is the aftermath. So, this is why I'm kind of happy to leave stuff at 5R targets today, because I think there's a good chance we're at 125, and just shy of 125 on the NASDAQ. So we are very extended today. We will get a pullback into these propulsion gaps to retest these at some point. But at the minute, look at these wicks. It's just pitiful. 5, 10, 15, 20, 25, 30, 35 minutes. Absolutely directionless, but masses of volume. Volume profile at the moment. Everyone trading volume profile at the moment will see that. What do you do with that? You just can't do anything. They're all waiting for it to come down to there so they can buy it. Or they're waiting for it to break out of there so they can buy it. You can't do anything with it. It's just stuck. Stuff is stuck. So yeah, there's not much else I can really look at this afternoon. We're waiting for something to happen, because obviously we've had a lot of volume, a lot of movement today and yesterday, but it's basically it's undone the vast majority of the moves that we've seen. This yen is holding at these weekly high. Limit order triggers have kicked in here, driving the market back down. So hopefully we're just going to push back down into these lows again, unless we get some intervention from the yen. But everything at the minute, just V-shaped recoveries. So not a lot you can really do with stuff. Again, we're sitting sideways. Again, it's just another one of those days where we're just sitting sideways. This is the sort of market you want to be sitting on 5-minute charts and just trading ranges. But when you do that, that will suddenly change, and then you'll be trying to trade ranges in a trend and you'll lose all your money. Just got to sit through these bits and be patient and wait. I've set up the EA, by the way, on this. This is a live account. This is that $1,000 account I set up just to play around with. So this is now trading the new position trading EA, which is running on here on the VPS. It's this one here. So it's trading everything, all 28 Forex pairs. But it's split. All the Aussie and New Zealand pairs are trading ADR. But they're trading 80% of ADR. So they're working within the average daily range, just trying to trade swings within ADR. And all the other pairs, which are not Aussie based, are all trading RSI extensions. And US dollar Swiss and pound US dollar, I am manually trading with pending orders and stuff, and just testing that the EA will trail the pendings and do everything that they used to do. So I'm doing a full live forward test, which is all working fine at the moment. As you can see, it banked 8.29% this morning. It's only $1,000 account, so it's not a lot of money, but I'm using high risk. I'm using 1% risk per trade. So because I need to get volume on, I need to get lot size up. I don't want to be trading 0.01s because I'm also testing the automatic drawdown control system. But I need something to get into drawdown first, which at the moment I don't seem to be able to do. So, so yeah, it's all working fine. I've got back testing to do. I haven't managed to do that today, but that's on my list to do tomorrow and over the weekend. So once the back testing's done, and assuming all this live testing all works, and I need to get something into drawdown, I need something in at least, can't remember what DD I set. I need something in 3% of drawdown and 2%. I need something, ideally I need something to get into 2% of drawdown to test the drawdown control system. And I need something in 3% of drawdown to test aggressive drawdown control entries. So I'm going to have to leave it running live until one of those conditions is met. So as long as that takes, basically, and then that will be ready to go, which is good. I'm learning an awful lot about moving averages I didn't realize as well. I've always used, all of my trading life, I've always used EMAs. I was always taught by, when I was in stocks, I was taught to use EMAs, and my other mentor that I was with in Forex always used EMAs as well. So I've just been exposed to EMAs all my life. So I've just used EMAs as default because that's what I've always used. But I've been doing some testing on smoothed moving averages as opposed to EMA. So there's an EMA. The SMA, you'll see, is very little difference. So the difference between an EMA and an SMA, flip a coin, it doesn't make any difference at all. But you suddenly switch that over to a smoothed EMA, and you get a very different profile to the moving average. So EMA and SMA, virtually no difference, but smoothed makes a very big difference. One of the back tests I'm going to be running is to run a system parameter permutation test with multiple MAs. So I'm going to test the EMA, SMA, linear MA, and smoothed MA. And also I'm going to test in 5 MA increments, so the 5, the 10, the 15, the 20, 25, 30, etc. Just to see what impact it has. Because what I'm trying to replicate here is as close as I can to a market structure reversal without using market structure reversal indicator. And the SMA is actually the closest thing. There was a reversal alert there on that candle. Have I got? I don't think I've got it. Oh, I might have it. Yeah. Yeah. Oh, actually, there was one down there. So this is what I'm trying to avoid using an MA is these big, horrible. We've had lots of them today with the ADR hits. These big, horrible reversals where you get into the market there, but I got into the market there today. The MRA EA would have got in there. Yes, it's safer. We've had a hell of a lot more confirmation of selling pressure than we did there. But look at that SMA entry. This was taken with an EMA entry, but that is the SMA entry. Yeah, big difference, isn't it? It's around about a third of an ADR extra profit, but without a confirmation of market structure break. So what I'm going to do when I've decided which MA I'm going to use initially for the signal trigger is I'm going to back test the two next to each other. So the market reversal alert EA will be back tested over a period of time with exactly the same strategy as this without using the market reversal alerts indicator. And I want to see what the difference in drawdown is and the difference in profitability is between the two. That's partly the reason I'm developing this. Just to simplify life, basically, and stop missing out on some of these entries. Some of these squeezes, I looked at some of these squeezes I've been in, and this is part of the reason I started building this. Some of these squeezes I got into last year, I looked at the spacing on the entries, and I found a lot of the spacing was where I'm choosing 0.75 ADR for spacing. I was finding 1.5 plus ADR spacing between my entries, which makes the average very difficult to achieve. However, what I found was an awful lot of pullbacks within that distance where you would look at it on a chart and go, that's obvious, a bounce point. But the EA wouldn't achieve that because the market structure wasn't changed there, because the bull run was too fast. So you didn't get enough downward movement to trigger a signal. So you ended up getting into squeezes you wouldn't have been in if you just scaled in properly. I say properly. There is no right or wrong way to scale in. What you don't want to do is suddenly turn into a grid trader, because that's going to kill you. But the whole purpose of the moving average crossover is that if the market does that, you don't get in. Yeah, so we're not grid trading. If it flies through a level, grid trading is where you set orders at specific points. And if the price just slams through 3 of them, you go short 3 times. That kills you, because now you're in 3 times the drawdown you should be, because there's no reason to go short. When the market is doing that, there is a reason to go short. And if it doesn't work, that's fine. But there was a reason to go short. So that's one of the reasons I started developing this, because this is a fantastic indicator and it's great for identifying market structure breaks, but and reading market structure, but it has its negative points. So it's going to be an interesting test to run, running this alongside the market reverse alerts EA and just seeing how different the drawdown is and how different the profitability is. And the weighted moving average as well, as Bryce just said, when you look at a weighted as well, it's probably better to stick them on there, isn't it? So that's a smoothed, isn't it? 9 smoothed. So if we go 9 linear weighted and I change that to, I don't know, dark. And then we go with a 9, we'll just use the EMA, because the EMA and the SMA are very, very similar. Something we can see. Pink. Yeah, so you see the difference between the 3. So that is your smoothed. That is your exponential. And that is your linear. So this is equivalent to, for example, on the market reverse alerts indicator, aggressive mode or non-aggressive mode, wicks to the left mode, non-wicks to the left mode. Yeah, so it's just another mode where it kind of gets you in a little bit slower. So the linear, as you can see, is the slowest. The smoothed, as you can see, is the slowest entry signal. You got more confirmation there. With the EMA, you're going to get triggered in a lot quicker, but it's only, you can get triggered in on 1 candlestick. The smoothed, you're going to find it hard to get triggered on a single candlestick. So it's a better, I think, EMA to use, but I'm going to test it. I'm not interested in profitability. I'm interested in how it affects spacing between entries, because what I don't want to do is just suddenly turn into a grid trader, because that's not going to work. So I need something that's going to help with that. And it may not be the 9. The 9 is, again, it's just what I've always used. I was taught from day one in stocks, 9 moving average is one of the most used stock index, stock trading moving averages there is. So I've always concentrated on the 9 for the 5-minute chart, because that has always been the best. But we'll see. Testing will show me the way. Very nice, robust approach to testing. We'll be keen to find your knowledge, to know your findings. Yeah. It's what it's all about. It's not about finding the most profitable. It's about finding the robust mechanism. If I run a test on, and this is a test I will run, I'll test the 5, the 10, the 15, and the 20 moving average, and I will test the weighted, the EMA, and the smoothed. What I'm not looking for is, the 15 weighted is the one, because that one generated 3.5 R, whereas these all produce less. What I'm looking for is, did that make a profit? 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 And did it make a profit regardless of which one was used? If that's the case, that is an incredibly robust signal. Yeah. I'm not interested in which one made the most money, because in the past, that one was the combination to use. Go back the year before, and it was that one. Go back the year before that, and it was that one. Go back the year before that, and it was those two. Yeah. Every year, market structure, price action, fundamentals, ADR is different. Month on month, it's different. Different year on year. In the future, you don't know what it's going to be. What you want to know is, does it matter which of those I use? No, they all made money. Brilliant. Well, let's use it as a signal then. Yeah. Does it matter which of those we use? No, they all made money. Pick one. Yeah. I'm going to default it at the one that I want, which I think is going to be a smoothed. But if I do robustness testing over a year, find out that they're all within 1 or 2% of each other, and then I do the previous year and find out there's one standout winner, I'll use that one and I'll test that over 3 or 4 previous years. And if it is the one, that's the one that will be set as default. But any should work, because it doesn't matter, does it? If it triggered there, like my trigger on the EMA was there, the trigger on the SMA was there, the trigger on the weighted was there. Did that make money? Yes. Does it matter which moving average you use? No. That's the 9. Would it matter if you used the 5 or the 20? No. Still made money. Did the market come down after you entered? Does it matter where you got in? No. Doesn't make any difference. It will make a difference in the results, obviously, because this needed to get to there to close out a profit of 0.5%. If it got into the trade here, it may not have got to the 0.5% target. And if it pulled back, you would be in that position maybe for an extra 2 or 3 days. That would be the difference. The drawdown would be different. The distance of the amount of time in the position would be different. The profitability is going to be the same, apart from obviously swaps. But so yeah, I'll be testing all of that, which I do with everything I do. Everything is tested to death. And if it comes out the other end dead, goes in the bin. That new EA would be nice to see how it would have played out last year on the GU squeeze. I just tested that. Literally, I've just tested that using the 2175 RSI on the hourly. So this is October last year till now. Anybody home? There we go. I don't know when the squeeze was, but you'll see it. I'm pretty sure you'll see it. Bear in mind, this isn't using drawdown control at all at the moment. There it is. That was the squeeze. Yeah. So it ended up generating alpha. What we want, isn't it? Indices are so frustrating at the moment. I'm going to let this play out until lunch in the US. Look at it. It's just all over the place. It's just all over the place at the minute. Can't do anything with this today. This is just... You get these days, it's just mental. You just have to walk away and go, can't work with you today. It's like having a boss that's in a bad mood. Not going to talk to you. I'm most excited about the manual entries. Yeah. That's just triggered me in. But on the manual entries, the way they work basically is, let's set a sell stop. So you have your sell stop placed wherever you want it placed. And basically the way it works, I mean, I wouldn't do this on the 1 minute time frame, obviously, but you see the sell stop is there at the moment. What it'll do is the logic basically is, are we pushing further up? We want to go short. Are we still moving up? Yes. Okay, brilliant. Well, when this candle closes, if we're still moving up, move my order up. If we continue to move up, move my order up. If we keep moving up, move my order up. Just keep moving my order up until we're ready to go. There you go. See that jump? So that was where the order is. Now the order is there. If this continues to move up, this will then jump up to there. And it will keep jumping up until the sellers come on board. Then we're in. And then it will automatically put the next order level in. So if that move plays out, fantastic. If that move doesn't play out, it will scale in automatically, do your drawdown control, do everything else that you want it to do. That keeps rallying. Look, we've got 30 seconds left on that candle. So this will move from there up to there. And if, as long as the bulls are in control, we will just keep going with them and wait until the sellers take it back, which is probably going to be there. Hey, do I sound like ICT? So as you can see, the market is moving up into a fair value gap. The liquidity is sitting above this level, and you will see when price moves to here, it will move away. And I'm going to show you this because it's a perfect trade I recorded. It's 1 out of 25,000 I took, but this is the only one that worked. So this is the one that I'm going to show you. He doesn't sound like that at all, does he? So there you go. So that's just moved from there up to there because the market's still pushing. So now if we get an inside bar, it will leave it there. And if we get a little push there, it will move it up. If it comes down, it will leave it there until it triggers. And it will just keep waiting for the sellers who we want to come on board with us. And that will typically be when you hit some liquidity where they're looking to hunt your stops. I can't do impressions of Americans. I'm useless. Don't forget they're watching. Oh, yeah. Oh, I am the watching, obviously. Yeah. Afternoon, Steve. So you'll be amazed what will happen, right? When we hit this level, I'm not making this up, right? But there's an algorithm in banks, right? When you get to this level here, the algorithm will automatically kick in and move price down roughly 50% of that move. Yeah. And from there, it will hit another level where the move started from and push back up. And some people call this market structure. It's been in existence for about 150 years. In fact, if you go and look at any chart from any time in history, even in the Chinese periods of back in the 2000, the 1918s, 17s, whatever, you'll see the same phenomenon playing out. And it's caused by people buying things and selling a part of it and then buying a bit more. But there is now apparently an algorithm that controls this all. And it looks for retail traders who are on YouTube and hunts their liquidity. So all the central banks are sitting there watching YouTube going, get ready to sell, guys. This bloke's got £200 stop loss at the top. It's fun. There you go. So that's triggered. So the EA has automatically now put the next short order in place. So if that does that, we will jump in for a second position and get out on the pullback. If it comes down, we will just get out with 0.25% profit. So yeah, that's part of what I'm testing on the pound US and the US Swiss. On H1M5, for example, when you space the entries, does it need the reversal alert to be above 3/4 of an ADR or just touch the 3/4 of an ADR level? The reversal alert has to be above 3/4 of an ADR. So, so the Swiss yen sell there, yeah. So the next entry on this will be 67. So it will be somewhere around there. Yeah. So price needs to push up on the 5-minute time frame. Yeah, so price needs to push up above that level. If it then slams down and the reversal alert happens there, it will not take a trade because the distance between that line and this entry is less than 3/4 of an ADR. If it pushed up here and the reversal alert happened here above that line, it will take a trade. Yeah. So the idea being is if price spends 58% of its time moving up and down within ADR, yeah, what we don't want to do is as price is just ranging, we don't want to just take a trade because it's in a range. We want price to have pushed far enough away that we can get in on a profit take, on a pullback, because we know that after big pushes come big pulls, A-shaped recoveries, V-shaped recoveries, etc. So it takes trades when we're above that level. The new logic on this new EA that I'm developing works in a slightly different way. It needs to open above and can close below. So the downside to this is if you have a whacking great candle like that, it will take a second trade there. Yeah, that logic I can change, but the amount of times that happens is remote. And it would typically be around a news event. And if that's happened, happy days, it's going your way, isn't it? So what you've just done is taken another order, and the high likelihood is you're going to get out of it very, very quick. So it's not as important. But what I also need to be aware of is I do not want to get in too far away from that next position, which is why I've moved back to a moving average instead of a reverse alert to test the difference, basically. If I find that the moving average is hideous and it's just getting into high drawdown because it looks like it's turning into grid trading, there's two solutions. One is to move back to reverse alerts, which I can do. I can build in logic for reverse alerts in a different way to the market reverse alerts indicator and build that into the EA. But the most obvious solution is to change your moving average. If you're finding you're getting in too aggressively, don't use a 9, use a 15. Now you're not going to get in as aggressively. Yeah. So this would be much more like a reversal alert than a 9 would. But, you know, and this is what I mean. There's very little difference in it. When the market, what we're looking for is we're going short. Did it work? No. All right. Well, let's get in somewhere up here. Where? I don't know. Does it matter? You just got to get in again, because all you got to do is you've got to move this price up closer to where we are. Whether you get in there, or there is irrelevant. The fact is that's moving up and it's within the average daily range of the instrument. We know that the pullback of an average daily range happens often, and that's where we get out of the trade. So it doesn't matter which of these you use. But you don't want it, ideally you want it happening above this level, but it's not going to be possible because you can't build every instance into the logic of an EA. So I could say, if it's above and it's below, and if it opens above and closes below, but the distance of that is less than 10% of ADR, take the trade. What if it's 12% of ADR and it's hit a resistance? And that is the one that, you know, you would want that. So how do you say which one is good and which one is bad? You can't, because you don't know. Because when it takes this trade, it still doesn't know whether or not that's the right place to do it or whether it's going to go up anymore. So the logic I've decided on is open above, close below. That's okay. Open above, close above, absolutely fine. Open below, close below, no, because we haven't got there yet. We've got to at least get to the level. Yeah, but I might change this logic. Again, this is all part of my development and testing. If I find there's too many grid entries being, or what looks like grid entries, i.e. every single entry is, I've asked for it to be half an ADR apart, and every single one is 0.45 to 0.55 apart, that's grid trading. I don't want that. I want to get in when the sellers are in. And if the sellers don't come in for one ADR, I don't want to be in either. I want to be in with them, because these are the guys that are going to drive the price down for me. Which is that. But it's also a slower, smoothed moving average crossover. It does the same, very much the same thing. But again, I don't know the exact what it's going to do. That pound yen look, for example. So next entry for that one is going to be there, which is 175 ADR. So, you know, that's, you've got an entry there, you've got an entry there. Next entry is going to be there. Distance between the entries is 76 pips. Distance between entry 1 and entry 2 is 102. Yeah. So I've said, get me in 76 pips at least apart. What this has done is it's got me in 102 pips apart, because it couldn't get me in closer than that because the market was pushing hard. So yeah, absolutely spot on. I do not want to be in until this thing's coming down. I want sellers on board. So it works perfectly, I think, using the MA most of the time. But you're going to get instances. You know, everything you do in trading, every strategy you use, every system, every indicator, every EA you use, there's going to be instances where it just doesn't work. because there is no way of programming everything in the market into everything. It just can't be done. You just got to take the majority. So if something happens 80% of the time to 90% of the time, use that. The 10% of the time, it's going to go wrong. You're going to get entries too close together. You're going to get entries too far apart. Something's going to go wrong. Deal with it. Your job is not to stick an ear in a chart and go and sit on a beach and drink a Mai Tai. Your job is to monitor your P&L and deal with the P&L. That's what I'll be doing. This is what I'm doing here. I'm monitoring this to make sure this is all working as it should be. If I see two positions right next to each other, I'm going to have a look into why that happened. And if one of them's moved down, I'll probably shut that and go, well, that's lucky I've spotted it. But I would have spotted it because I'm paying attention, doing your job, which is watching your portfolio moving up and down. Afternoon, Mohammed. Brian needs his towel again. Out of NASDAQ short, hit TP. Good job. I think I'm ready for the Robbins Cup. Go for it. As long as the Robbins Cup is making $75 a day, you'll be good. Right. I'm going to leave it there because I've been on for an hour and a half and I've got stuff I need to get on with. So market's moving quite nicely at the minute. Obviously, as we know, it's moving quite nicely, but whether or not we are going to get sustained moves off the back of all of this volatility today, we'll have to wait and see. So everything could just sit sideways. We've had literally a move up and a move down. We're back to where we started. So as you can see from the pound US dollar, we're still not really going anywhere fast, are we? So all of this news today is literally just giving us a headache of volatility, which is good. Make some money out of it. Yeah, and as Peter's just said, the yen is moving a bit at the moment. So we've got some decent strength coming through on the yen. What's this? H1M5, yeah. So yeah, nice movement. There's no, doesn't look like this is the Japanese. Just had Jefferson speaking. Slower growth, continued strength, upside risk. PCE rose 2.4. Cautiously optimistic about inflation progress. That's good, meaning rates down, which is bearish. That extreme greed at the moment. Market bullish. That's why we're getting all these rallies in the indexes. Putin, we are ready to work with any US president. Not like you have a choice, is it really? Russia is ready to dialogue with strategic stability on strategic stability for the US. But it must be honest. Coming from Russia, we must be honest. Right, there we go. So that's all for today. That's an absolute crapshoot today. So I'm going to wait and see what happens with those. If we're not moving anywhere further from where we are, I'm not getting out of anything. So this is just going to be a loss day, unfortunately. But I have got profit from the morning, which will cancel out the FTSE. But the FTSE is going nowhere either. So just a mess today on the indices. But FX all starting to go in the right direction. So good progress there. So we'll see where we are tomorrow. I'm back on tomorrow morning, doing the same as today, basically, pretty much 8 o'clock tomorrow morning. And then we'll do a 2 o'clock tomorrow afternoon. There is no news tomorrow. And it's a bank holiday in Japan. So sometimes it's a very dangerous day for the yen. Not necessarily positive or negative, but for movement. It could go up, could go down dramatically. When they're not there, quite often the US take advantage. So we'll see what happens. But there is no news tomorrow. So we go where the market goes. All right. So I'll be back tomorrow morning, 8 o'clock. I'll be back tomorrow afternoon at 2. Anything you need, I'll be in Telegram or Discord. Anything you need, I'll be there. Other than that, I need a laugh. Going to watch that video again. Yes. Go and watch the clowns again. That's always good. So yeah, I'll be back tomorrow. Anything you need, let me know. Otherwise, have a good one. I'll see you next time.